Hi folks, this is Sean Hyman, and I want to talk to you today in the chart of the day about standing aside until the comb pattern completes. Um, I've chosen this on a small time frame because you don't see this pattern a ton, but you will see it creep up here and there, and it typically will either form bottoms or tops. Since had been coming down for a while, it was trying to form a bottom and break out to head higher. And again, since this is on a 5-minute chart, we're talking about a short-term bottom, not a long-term turnaround in the Euro-Aussie pair. But this is a volatile pattern, an ever increasing volatile pattern. Matter of fact, you can see after the weekend here this huge gap down. Then there was another gap as well. And the pattern just gets very, very volatile and sometimes very tough to predict for the newer trader while the pattern is forming, because it'll have these huge dive downs and then come back up again and then have another huge dive down again as well. And it's hard to tell where this pattern is going to complete and end. In other words, whether it would have dive down again, or whether it would have come back up and out of it. Now, one of the things that's nice is when you've got this enormous tug of war going here, and it gets ever volatile. I mean, picture people on both sides of a tug of war, and they're snatching ever harder, harder, harder. Eventually, somebody's going to give in. And in this case, it was a bottoming pattern, so the bears gave in and the bulls won. Well, when it regains its sanity is when it typically breaks out, and when it breaks out, then you get a base building time, and then it takes off again. And so I would encourage you to stand aside until the comb pattern completes when you see these patterns. And the pattern is ever widening. I mean, the top widens and the bottom widens, and the tug of war between the bulls and bears is yanked from side to side. It gets very violent. But wait until one side decisively wins, because rarely do these things break and then just take right off. You'll notice that there's a number of candles that basically build a base that test the cone again, and then before it heads higher. And so wait until the pair becomes more predictable. Wait until it regains its sanity. If you do trade within the pair, definitely trade from the short side when when the cone's heading down, and short near the top with stops well above the top, because sometimes you can get some crazy spikes above as well. Do not try to catch the falling knife and try to catch the bottoms, because your momentum is going to be to the downside. It's going to fall very fast and creep back up a little slower, fall very fast and creep back up a little slower. So the momentum, the speed, the speed with which you can profit is definitely going to be faster on the downside than on the upside. It's also going to be a little bit safer trade. So if you insist on trading the pattern, definitely take the short side of it. That's where your better probabilities lie. But the more conservative trader definitely wants to wait until this excessive, tough to predict volatility ends, and then the more consistent base building begins, so that you're in it, and then you're there when it starts to take off and reap the rewards there. All right, that is the chart of the day and the cone pattern, and when is best to be in and be out of it. Thanks so much for watching. Bye bye.